Internal Revenue Service IRS tax news. Most taxpayers can deduct up to $300 in charitable contributions without itemizing deductions. COVID tax tip 2020-170, December 14th, 2020. Following tax law changes, cash donations of up to $300 made this year by December 31st, 2020 are now deductible without having to itemize when people file their taxes in 2021. So basic rundown here is usually the donations to charity would be something on the itemized deductions Schedule A. There's a change now that says that you can deduct up to $300 of charitable contributions basically as an above-the-line deduction. It's actually not on Schedule 1 like most above-the-line deductions. It's on the face of the Form 1040. But in essence, that means that you can donate to charity even if you're not itemizing up to that $300. Now, obviously, we're getting down to the end of the year, so if you want to take advantage of, a $300 donation and help out a charity this year and get a deduction for it, then you could do that if it's a qualified charity. So this is a bit different than what has happened in the past, because in the past, basically, you had the itemized deductions, and if you itemize the deductions and they do not add up to more than the standard deduction, you wouldn't get a benefit for the itemized deductions. And therefore, people that have charitable contributions who are taking the standard deduction wouldn't get a tax benefit from donating to charity. Not that that's the reason to donate charity in the first place, but you wouldn't be getting a tax benefit for it. In that case, now they got this $300 above the line type deduction. If you are itemizing, then you could deduct more, of course, on the itemized deductions, but you'd only be getting a benefit for that if you were in a situation where you have to itemize deductions greater than the standard deductions, and therefore we're itemizing. Okay, the Corona Aid, Relief, and Economic Security Act includes several temporary tax law changes to help charities. This includes the special $300 deduction designed especially for people who choose to take the standard deduction rather than itemizing their deductions. And that would be anyone, of course, who has the standard deduction would be greater than if they were to itemize the deductions, which is more people than it was a few years ago when they simplified the code by increasing the standard deduction, meaning more people are probably going to be taking the standard deduction. So this change allows individual taxpayers to claim a deduction of up to $300 for cash donations made to charity during 2020. This deduction lowers both adjusted gross income and taxable income. That's because it's an above-the-line deduction, so it's going to decrease the adjusted gross income and taxable income, translating into tax savings for those making donations to qualified tax-exempt organizations. Before making a donation, taxpayers should check the tax-exempt organization search tool. There's a link to that here on IRS.gov to make sure the organization is eligible for tax deductions, deductible donations. So obviously there's kind of an increased need for donations in some ways this year, although there's always needs for donations to charities, but you want to make sure you're giving to a legitimate charity so that they're going to, they're doing some good with the money. And if you can give it to the charity as opposed to the government, that money's probably going further, in my opinion. But you want to then find a good charity. One place to start would make sure that they're if they claim to be or if they're looking to be a tax exempt organization, then you want to make sure and do the research to see that they are indeed a tax-exempt organization. That's kind of like the start to the research. Then you can research how effective and efficient they are at, spending their money on the actual charitable type of stuff. Okay, back to the text. Cash donations include those made by check, credit card, or debit card. They don't include securities, household items, or other property. So you can donate to charities for something other than cash on the itemized deductions. But for this $300 one, it's basically cash donations, which include cash, credit card, and debit card type of donations. Though cash contributions to most charitable organizations qualify, some don't. People should review publication 526 charitable contributions. There's a link to that here for details. Cash contributions made to supporting organizations are not tax deductible. The CARES Act includes other temporary allowances designed to help charities. These include higher charitable contribution limits for corporations, individuals who itemize their deductions, and businesses that have food inventory to food banks and other eligible charities. So they have increased some of the limits for the charitable contributions on the itemized side as well. This is probably not, I mean, it's good to know that they've increased those, but they're probably going to be a factor for like high income individuals, because, you know, most people, the itemized threshold in terms of how much you can give to charity is probably over what normal people would be. They wouldn't be able to afford to give that much to charity. So they've increased those thresholds that could be relevant. Of course, these being on the Schedule A. So if you're putting money in on the Schedule A, there's an AGI or adjusted gross income limitation as to how much money you could put in, depending on the category of charity that you have. And again, that could be something that could be impactful, especially for possibly more well-off individuals. So, but for standard tax planning, I would think that the normal AGI limitations are probably, you know, higher than most people give to charity, because, you know, they just couldn't afford to give that much in. But in any case, for more information, visit coronavirus relief tax page, the coronavirus tax relief page. There's a link to that here. You can also visit it on the IRS.gov website. By law, record-keeping rules apply to any taxpayer claiming a charitable contribution deduction. Usually, this includes getting a receipt or acknowledgement letter from the charity for filing a tax return and retaining a canceled check or credit card receipt. So you're going to want to make sure that you have the documentation that you donated to the charity in the event, of course, that an audit happens, that you have the supporting documentation to support the deduction. So more information, a closer look, special tax deductions available this year. There's a link to that here. There'll be a link to this in the description.